There's four things you have to look at when you're looking to invest in an apartment building. The first thing is, what's the cost up front? That's your purchase price, and if you're going to do any renovations, add those two up, and then subtract what you think your exit sales price will be. It's pretty simple, but you have to make sure that as you look at that you have a good budget for the renovation, and that the renovation doesn't go over budget. You also have to look at the comparable sales for when you sell the building to find out what the real sales price will be when you go to sell it in a few years. The second point is, you want to look at what the building is currently generating in rent per unit compared to what you estimate it will generate after you do a renovation. You want to see a good bump in the rent after renovation, typically 20 to 30%. If it's on the high side of it's 30%, you found a good building, good opportunity to increase the rent. When you increase the rent of a building, not only does it increase your cash flow, but it also increases the value of the building. The third point is looking at the cash flow. How much cash will this generate each year after the renovation is complete? And we call that a cash on cash return. So how much money did you put into the building and how much you're going to get back each year? And then the fourth point is seeing your total return. So that is, when you sell the building, how much will you be able to sell it for and get the return on your initial capital with all the rent that comes in and the sales. So those are the four things you want to look at if you want to invest in an apartment building to get double-digit returns.